You've seen my first supply and demand video, but you aren't quite sure how to properly draw supply and demand zones. Well, if you watch this video, I'm going to be going over how to simply draw supply and demand zones every single time. Let's get into this video. Now, after my first video, I dropped it. It did pretty well, but someone sent me this picture of the chart. It looks something like this. Now, you know me, when I saw that chart, I can't let my people be walking around with charts like this, so they go back into the studio and make a part 2 for supply and demand. Now let's just jump straight in Thinkorswim and get everything going. Now when it comes to supply and demand, there's pretty much 4 patterns you're looking for. You're looking for the rally base drop, the rally base rally, the drop base rally, and the drop base drop. And as I mentioned in my first video, you can find these areas or patterns on every single time frame. And like I mentioned previously, the larger the time frame, the more power or strength it's going to have. Whereas a small 5-minute time frame is not going to have as much power as in, a monthly time frame. And I also forgot to mention in the first video, once price breaks over supply or demand zone, it invalidates the zone. I just remove it off my chart. So let's just find a few examples of each of these patterns and how you can formulate trade patterns off of these. The first example I have right here is going to be an ES/ES to S&P minis, and we have a rally base rally pattern. So this is on the daily time frame. Look what happened here. You had this move from 39.30 up to highs about 4,100. You formed a basing candle right here on the daily time frame, some nice consolidation, and you had a rally out of it. And if you would have seen this pattern forming the daily time frame, when we pulled back here on August 5th, you wouldn't have been surprised when we bounced out this daily demand zone. So if we zoom into a smaller time frame like the 15-minute, on this day we had job numbers come out, and look exactly where we bounced in the pre-market. You sold off from about highs of 41.60 down to 4,100. And price bounced exactly in this daily demand zone from the rally-based rally pattern we formed. Now, lots of people I spoke to, they're pretty bearish right here. They were buying puts, not knowing we're coming into the daily demand zone. But me, I was trying to tell them, you formed a daily demand zone right here. I definitely want to be going short right here. And price bounced and almost got up here and came right back down into the demand zone and bounced even further. And we're yet to retest the zone just yet as of the making of this video. And so for an example of a drop-based drop pattern, I'm looking at the NASDAQ 100 on the same day, August 5th, when job numbers came out. I initially missed this drop-based drop pattern, but looking back, it was such a clear pattern and it was an easy short trade. Now, you already had this giant daily supply zone up here around 13,300. So I was telling people pretty cautiously not to go long up here. But when job numbers came out, you had this little green candle and we're on the 1-hour time frame. And you form this consolidation basing period right here. This clearly constitutes strongest supply zone right here. Now, if you zoom in even further to like a 5-minute time frame, you'll see exactly what happened. So if you were aware of this day, price bounced to open. And look exactly where price came right back into in this pattern. So you dropped, base right here, another drop. You rallied right back into the supply zone, and you sold off about another, 200 points. This would have been a great short position if you're ready this day. Now let's move on even further. And looking on the NASDAQ 100 on August 1st, we had a rally-based drop pattern. So pretty much we rallied from lows of about 12.8, hit highs of about 13.1. You formed this rally-based drop pattern. You rallied here, started basing sideways. You dropped even further, kind of trending down lower back to lows. Now you formed supply up here. So the last green candle to the highs before the move down. Look exactly where price came back into on the following day, August 2nd. You rallied right into the same exact supply zone and sold off about another 200 points or 300 points. If you were prepared this day, this was another great short position opportunity. And moving a bit forward, people always ask me, when is it time to take a long position when supply breaks? Now, if you zoom into a 5-minute time frame, for example, look what happened here, and this would constitute going long. So you had this supply zone drawn out in your chart. It was a 30-minute supply zone. So price here on August 3rd opened up in the supply zone. So right here, as you saw buyers trying to push market higher, buyers are clearly buying this market right here, making big lower wicks. Price is pushing right here. You're breaking over highs from this supply zone. And clearly you broke over the supply zone, and look what happened. You broke over the supply zone, came back, retested the supply zone, and this would be a great long entry. You could either buy the breakout of the supply zone, which is a bit more risky. I always try to avoid buying the initial breakout. I'd rather wait for the retest and set myself up so I have somewhere to base my risk. I'm not just buying in the middle of no man's land. On to the last example. Now for the last example of a drop-based rally pattern, we're looking at Tesla here. So on July 29th, we formed a demand zone on the 1-hour time frame. And look exactly where price bounced out of. You had this consolidation on the 1 hour time frame, pushed out to highs of 937 and sold back off right down into the exact demand zone. Look exactly what we formed down here. We formed a drop, we based sideways, and we rallied out. So this would be considered a drop base rally pattern because we dropped from highs, consolidated sideways, and rallied out. And making this pattern even more valid, we rallied out of a previous demand zone. So this demand zone right here would be drawn something like this. And price, if it revisits this area at another time, an even stronger demand zone because there's clearly buyers in the market right here around 860. And each time prices came back into this demand zone, it's bounced out of it. And this is a valid entry for a long position for a drop-based rally pattern. And just to reiterate before I go, when you're drawing a supply or demand zone, you want to draw it from the body of the last red candle to the low before the move down for a demand zone. And then when you draw a supply zone, you draw from the body of the last green candle to the high before the move down. And then when price breaks over that supply or demand zone, I just delete it from my chart. It's like it never was there. Now you can either trade them at the upside to the downside, or me personally, I'd rather wait for the break and retest to have an area to base my risk off of and take a higher probability trade. Now, if you learned anything or this video helped you, just drop a like and comment and subscribe maybe. If not, just let me know. And if you got any suggestions for me, just let me know in the comments below. Thanks for watching.